Well, I wouldn't blame you if you looked at today's end result of the S&P 500 being up 0.13% and thinking to yourself that it was a pretty quiet day. In fact, it was the exact opposite. We had a wild day, a day in which a lot of momentum and growth-oriented stocks got absolutely hammered. Probably a lot of people got hit with stop losses. And then we actually had a pretty furious rally into the close. In fact, I saw on Twitter that this was only the 11th time in the last decade where the market was down more than 1.8% at some point during the day and then rallied all the way back to finish in the green. So we'll take a look at all that, see what it means for our posture. Then we'll get into our trade application example where I wanted to focus on one of those stocks that has sold off pretty violently in the last couple weeks but is sitting right on an interesting support level. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's February 23rd, 2021. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down and check out our description area where you can sign up for our email distribution list. We're also heavy users of Twitter. I would encourage you to follow me there if you're not doing so already. My handle is @BrandonVanZ, and we appreciate those of you that click like and retweet on these Market Outlook related tweets. Last but not least, we do have a presence on Facebook as well. Feel free to join our group at that web address you see in front of you. All right, let's jump into the charts here today. We've got a lot to go over, and first of all, you can see I've got chart 4B pulled up here in front of us. And reminder that these charts, there's about 50 of them. Actually, I think it's about 52 these days that we've put together that we make available for our premium members. And that reminds me as well, I was going to share this slide. Hang on just a second. For those of you that were our charter members that started with David and I here at Market Scholars back in 2018 when we first launched, remember your 3-year subscriptions are coming due. Your expiration date will be June 30th of this year. So if you are amongst that original crop, we've sent out some notifications about our renewal discounts that we're offering all of you that were jumping aboard with us from the get-go. So just wanted to share this slide because this is the final week of the largest discount that we are offering of 25%. Starting 1 week from today, basically March 1st, that discount will drop down to the 20% discount. So I want to make sure that we get that information out there. I know we've sent plenty of emails and different communications about it, but I know how it is. Sometimes the emails get deleted or stuck in the junk folder or what have you. So just in case you haven't seen that yet, be aware this is your final week to do your renewal, to subscribe and extend your membership through June 30th of 2024. And again, that's only available to those of you that were our original members that signed up with us back in 2018. Many of you have already renewed, which is fantastic. We can't thank you enough for that. For those of you that have yet to do so, that web address you see up there at the top of the screen will take you to the specific area of our website where you would get that 25% off discount. And if that's too small for you, if you're watching this on a cell phone or something, just send us an email at support@marketscholars.com and we can get you that link as well. But anyway, most of you that are premium members know that you have access to our 52 different customized chart scripts, and this one is just chart 4B right here. And as you can see, it allows us to look at all 4 of the major U.S. equity indices all at one time. And you'll notice here that we've got a lot of long lower shadows today. Take a look at that long lower shadow, that long lower shadow, that long lower shadow, and that long lower shadow. Basically, what that gives us the impression of, and the whole reason we look at candlesticks as opposed to a line chart or even a bar chart, this is a little bit more obvious to stand out when you're looking at candlesticks the way that we do in these presentations. It gives you the impression that the buyers did not roll over here today. They might have gotten kicked in the teeth a little bit. They didn't roll over and die. They came fighting back, and it was a pretty impressive rally towards the close. Now, in some of the hardest hit areas, we didn't get back to break even. So for instance, the NASDAQ, where you find a lot of those high growth and momentum stocks that were kind of at the eye of the storm here today, you will find that the NASDAQ was still down 0.5% and the small cap Russell 2000 was down 0.88%. Both of those, because they were down, or part of the reason that this is the case is that they were down, is we do have a bearish posture now. So that pressured the markets to a degree. Now, we already had a slight bearish posture starting yesterday on the NASDAQ, But this is new information here on the Russell 2000. Today is the first day where our intermediate term posture has flipped to weekly bearish. Remember, we can see that very easily with this chart set up because the background color changes, in this case from green to red. And you can see that the green line down below, this is your market forecast intermediate line, it has slipped out of the upper reversal zone. So it's no longer considered strongly bullish the way that it was earlier. Now, with the two indices that did maintain some positive returns today, the S&P 500 being up 0.13% and the Dow Jones being up 0.05%, those two retain their strongly bullish posture. Notice that the background colors of the charts did not change from green to pink. Both of them remain above rising moving averages as well. Remember that these 30-day moving averages that you see plotted here have a color changing ability on their own as well, and it is not directly tied to the market forecast posture, but gives us additional information. When the moving averages are green, it tells us that price is above a rising moving average, which is generally perceived bullishly. So in a case like the S&P 500 and the Dow Jones Industrial Average, you could say both of those things are working for the bull's advantage right now. They have a strongly bullish posture according to the market forecast technical indicator, and they are both above rising 30-day moving averages. It's a little bit more of a cloudier picture down below with these other two. The NASDAQ composite, you can see here, it's got that pink background color telling us that we have a weekly bearish posture from an intermediate term perspective, combined with price currently below its moving average. Now, the moving average is yellow as opposed to red in this case because the moving average itself is still rising. Remember, the moving average is a lagging indicator. So today was effectively either our first or second day closing below that moving average. And so because it didn't close above the moving average, it's no longer green. It's giving us kind of that warning sign right there. If you think about it from kind of like a stoplight effect, green means go, and yellow means yield, and red means stop. Well, in this case, we're kind of in that yielding zone right now when we're thinking about it from a moving average perspective. But the fear is if we start seeing that the index gets comfortable trading below its moving average, the fear is that it will start using that moving average as a resistance excuse to bounce down and away from it. So again, the good news is 3 out of our 4 charts do not have that. They're not exhibiting that. Our fourth one that does, with the NASDAQ composite, had a heck of a rally near the end of the day. It closed near the highs of the day. Still down, but it gapped lower to start the day, and it flushed a lot of the weak hands out in the middle of the day and came rallying back furiously. The Russell 2000 is somewhat unique in that we do have the weekly bearish posture because the green line fell out of the upper reversal zone, but it still has the green 30-day moving average, saying that price is above that rising moving average. Again, your visual confirmation right there that the moving average and the green intermediate line on the market forecast are not one and the same in terms of what they're telling us on this chart. They can tell us 2 different things, and right now is case in point of that with the Russell 2000. Path of least resistance continues to be to the upside. We're still trading above a rising 30-day moving average. In fact, you can see that on this 3-month view that we're looking at right here, the moving average has been green the entire time. No other index here can make that claim. We had kind of red and yellow moving average here on the Dow Jones. We had a little bit of yellow action here on the S&P 500, and we're currently in the yellow moving average right now for the NASDAQ composite. So the Russell 2000 has been extremely resilient. Its momentum may not be as exciting as it was a few weeks ago. It has kind of drifted a bit lower, but it has stayed above that rising moving average each time. And this behavior that we saw today out of it is exactly what we're looking for. We want these types of products or individual stocks or whatever it is that you're looking at. If you want to be bullish on them, you want them to respect the moving average. In this case, we came down and tested it, and market participants decided that's a good entry point. Let's get in on that, and sent that particular index higher. How long it lasts is anybody's guess, but we do know that the low size factor / small cap universe has done pretty darn well over the last several months. We're still up 26% over the last 3 months, and so we kind of have to trust that this trend is still intact, and therefore there's still upside opportunity. I will tell you that tomorrow morning I'll be teaching my factor-based swing trading class, and while we didn't see a big shakeup in the Russell 2000 component of the factor selector where we look at low size stocks, we did see a massive transition with the momentum factor. And so real quick, if I want to come over here and take a peek at, let's take a look at chart 3D. This is the 6 grid. I shared this on Twitter earlier today as well. As a little bit more active today on Twitter, partially because of the craziness of the stock market. Some of you saw right away this morning on Twitter that I mentioned that I had sold 4 puts in my own personal account within the first hour. In fact, it was within the first 11 minutes of trading today, and that is very rare for me. I'm somebody who, when I sell puts, I'm selling them not to trade them, but to try to purchase securities at lower prices, and therefore they do chew up a lot of capital. So I'm not somebody that is a very active put seller. I'm somebody that is going to be very choosy when I'm determining when I want to sell puts. So for me to sell 4 puts on 4 separate stocks in the first 11 minutes of trading today, that is incredibly rare. It had have been months and months and months since that was last the case for myself. So I was, for one, very happy that the market rebounded towards the end of the day, because all of those put sells currently are sitting on profits. We'll see where it takes us. But it's been an active day, and therefore a little bit more active on Twitter. And one of the things I was sharing with a person I was kind of having a conversation with there was this particular chart. And I was mentioning how there was a pretty stark contrast right now between the dividend yield factor and the momentum factor. Notice the dividend yield factor actually hit a new monthly high here today. If you look at the momentum factor, we're actually trading below the 30-day moving average. So there is a pretty big difference in this market right now. Low volatility continues to do poorly as well. It's just that low volatility has been doing poorly. So this is not some sort of a new piece of information I would be able to share with you. Momentum had been doing very well, and then boom, there goes the rug pull, and a lot of those momentum stocks got caught up in the sell-off today. So they are now underwater over the last month and trading below their moving average, whereas we are seeing really good strength out of dividend payers. We're seeing really good strength out of value factor as well. Some of you saw me tweeting over the weekend about a dividend aristocrat company that's getting bought out. You guys know I pay close attention to those aristocrats, and People's Bank is being bought out by M&T Bank. So that stock has absolutely erupted here earlier this week, and I know many of you that attend my dividend growth investing class own that one. So we are enthusiastically cheering on that particular deal there. But that's just one example of some of those value/dividend types of companies out there that have kind of been left for dead in recent years, that all of a sudden are coming back to life again. And whether this is going to be a major rotation or not remains to be seen. But what we do know right now is there is pressure in some of these momentum and growth-oriented areas. In fact, let me go over here to the ratio chart as well. Might as well share some of that analysis with you. This will be chart 5Q for those of you that are following along at home. And so these are our ratio charts. Basically, the way that you read these is the first entity in the label is basically the one that drives the chart in one direction or another. So one example here in the orange where my mouse is down towards the bottom, it says equal weight S&P 500 divided by the market cap weight. And when you see this chart go higher the way that it is right now, what that tells me is that the equal weight version of the S&P 500 is vastly outperforming the market cap weight version. If it was the opposite, let's see if we can find one. Here's a good one: stocks versus commodities, kind of in the turquoise over here in the middle rung towards the left. This is a downward trending chart here. This is telling us that stocks are underperforming commodities. So think of the first one listed as kind of the driver of the chart. And one of the other things I was sharing on Twitter this morning was this chart in the lower left-hand corner. This is growth stocks divided by value stocks. And you'll notice that this chart has absolutely fallen off of the map here in the last couple of sessions, really the last 3 sessions. This thing topped out back here on February 3rd. In other words, that was at the moment in time where growth stocks were the most outperforming value stocks. But ever since that day right there on February 3rd, there was a slow unwind where value stocks started to outperform growth stocks. And then in the last 3 days, it really accelerated to the downside to the point where you actually have a broken support level on this particular chart here as a result of that violent action right there. Now you'll notice there is an open candle down below. And again, just a friendly reminder that there was a healthy bounce back for a lot of those companies that were getting trounced here today. Some of those stocks that were down 9, 10, 11, 12% in the morning came back and were only down maybe 2 or 3% by the end of the day. And so that might very well have been that flushing moment that I mentioned before, where it kind of, you shake out all the weak hands, the stocks end up in the strong hands, and maybe that will actually provide the launch pad for a future move. But right now, there is something to be said about value and dividend stocks. Banks and oil companies are making legitimate moves right now, which is something that we discussed a lot yesterday in my top-down trend trading class. Other charts here that are worth pointing out. One thing that did catch my eye that seemed a little bit strange to me, I'll point it out here as well. I had already mentioned the equal weight S&P 500 is outperforming the market cap weight. So one way to think about that is there's 500 stocks in the S&P 500. The market cap weight is the way that we traditionally think of the S&P 500, driven by stocks like Apple and Microsoft and Amazon and Alphabet and all of those. But obviously there's 400 plus other companies that are not those mega cap tech companies. And so when you see this chart erupting higher like this, it basically means all of those other companies are outperforming the Apples and the Microsofts right now. So that's not necessarily something that is unheard of. We've seen moments in time like that before. What was a little bit strange to me about it is coming on over here and looking at the small caps versus the mega caps, you can see that the small caps have actually sold off on a relative basis in the last week and a half or so versus the mega caps. Now, again, I know this is kind of comparing apples to oranges, but the smaller companies within the S&P 500 appear to be outperforming the bigger companies in the S&P 500, yet the smallest companies in the overall stock market seem to be underperforming the biggest companies in the overall stock market. So there might be this kind of moment in time where some of those mid-cap oriented companies are the place to be, where the truly small ones aren't doing all that great, and then the truly big tech stocks like your Apples are not necessarily the place to be either. So this might be one of those moments in time where mid-cap is an interesting place to be hanging out. Let me pop on over here to the internet briefly. And first of all, I always like to get a chance to say thank you to those of you that help support this product. And remember, I always pin my tweet to the top of my timeline for those of you that want to help support this particular project called the Market Outlook Video. I always strive to get at least 100 likes. You guys came through for me this last time around when I did it on Thursday. 109 of you did that. So thank you to everybody, Joss and SW and John and Dracula and Brad and Van and Fun and Tom and Deborah, Ken, Irene, Valerie, Sedona, and everybody else. Too many to read here, but we see you, and we recognize your support. Thank you very much. Please keep that up. Helps motivate David and I to continue to do these videos as often as we can. Also, I wanted to point out over here, since we're on the internet, now this is a zoomed in view because I know many of you, when you're watching these Market Outlook videos, you're watching it on your cell phones, and so I wanted to zoom in here because otherwise it would be really tiny for you to see. But I wanted to point out, some of you got an email from me over the weekend or attended my class yesterday when we discussed this in my top-down trend trading class. But I did create kind of a new enhancement or a new feature to the stock selector tool on our website. If you're looking for this and you're a premium member of Market Scholars, what you would do is hover your mouse over the Tools tab and then click on Stock Selector. Then at the bottom, there's a number of different tabs and views of that tool. And this particular view right here is the stock rank history, which is something brand new just as of this past week that I will plan on continuing to do going forward. Again, this is a zoomed in view, so it might not look the same to you when you're looking it up, but at least can allow me to kind of describe what it is that we're looking at here. So first of all, we track 1,000 stocks called the Market Scholars 1000. And they're going to be stocks that are not just U.S. companies. In some cases, they might be Chinese companies, like this company right here, WB. And you'll kind of recognize the color coding format here. The way that you would read this is reading it from right to left. So as an example over here, this is January 1st reading, and then this is February 19th. These rankings get updated by myself every Friday after the stock market closes. So these are updated once per week is the way that you can kind of think about this. And this new tab here doesn't just give us one snapshot in time like some of the other tabs. This one is going to allow us to track rotations and transitions that are taking place in the way that we rank these companies. Now, these companies are not ranked by their fundamental attributes. They are ranked purely by price, where we're using a weighted aggregate return system that includes time periods as far back as 1 year, but as soon or as recently as 1 month, with the 1 month and other nearer term time periods being more influential on the overall ranking of the weighting. But anyway, this new feature will now allow you to more easily see when strength is either accelerating or perhaps falling off of a cliff. In this particular case, WB presents a pretty good example where for the first month of the year, back in January, it was in this red coloring, in other words, the bottom third of all 1,000 stocks that we cover, and then it eventually transitioned to yellow right here at the end of January, which is in the middle third of all stocks that we rank, and then for the last 3 weeks, it was actually transitioning into the green or positive, in other words, the top third of all companies that we track here at Market Scholars. And so WB, I noticed earlier today, was up in today's session and has been transitioning very nicely on the charts here recently as well. So for those of you that are premium members, wanted to make sure that you were aware of that, because this will now be a way for you to start scrolling through here and maybe looking at another company like VSAT as kind of giving us that same indication there, red to yellow to green. Here's Embrar, which is a Brazilian jet company, going from red to yellow to green. Let's see if we can find some more. There's GNK, which is a shipping company. Looks like Wells Fargo actually shows up, right? Wells Fargo doing pretty poorly at the very beginning of the year, went into a neutral territory and has actually been progressing into the green here more recently. Here's another Chinese company, HUYA, that transitioned from red to yellow to green, and so on and so forth. And you can start scrolling lower and looking for those types of setups. So wanted to spend a moment to make you aware of that, because I know some of you who work during the day don't get a chance to pop into some of our premium classes, and sometimes this nightly video here is a way for you to kind of catch up on some of those things that we've been doing in classes lately. All right, let's get back on track now to some of these other charts here. Let's take a look at the 3 green arrows chart setup and see what the indices suggest from that perspective. Right now, we've lost our 3 green arrow signals on all 4 of our charts. We almost were able to retain it on the Dow Jones Industrial Average, but you'll notice a red arrow did come in here today, just barely, on the MACD histogram. So we did lose our 3 green arrow status on the Dow Jones here today. It is worth noting that the NASDAQ composite is actually in 3 red arrows territory right now. That actually happened yesterday and continued today with the sell-off here. So things are starting to slowly change. We don't have a lot of broken support report, but we have enough indication for us to kind of exhibit maybe a little bit more caution than we would have a month or so ago. Let's go ahead and take a look at some 12 grid analysis now, starting with the asset class 12 grid. This will be chart 5A. And as these pull up, a reminder that the background colors will suggest whatever the current posture is using the market or the market forecast technical indicator, particularly the intermediate line on that indicator. And you can see that we do have some green charts still on the board despite some heavier selling in various asset classes here more recently. The green charts are kind of clustered up kitty corner where they're kind of in one corner or another. The S&P 500 and EFA, which is the developed foreign stocks, retain their strongly bullish postures. They're both above rising moving averages at this point. And then we also have Bitcoin. We have the treasury yields or interest rates, and oil still giving us these strongly bullish indications. I mean, oil has just been an absolute workhorse. Yet another high here today, despite a sell-off in a lot of risk-oriented assets. Bitcoin got caught up in the selling today. Bitcoin was down 7% today. It retains its bullish posture because it is in still such an impressive upward trajectory, but it sold off, and that was normal, right? A lot of risk-oriented assets did sell off today, but oil has been like Teflon. It just continues to chug higher regardless of the circumstances of the market. So pretty impressive there. And as I mentioned before, interest rates also continue to be bullish. They did close a little bit lower today, but we did touch a new multi-month high in interest rates here earlier in the session before that sell-off took place. We do have an oversold cluster signal here on long-term treasuries at this moment in time, but we've had a lot of those recently. We really haven't had much of an oomph, much of a reversion to the mean type of a bounce. So you would expect that to happen eventually. You usually don't see this many clusters on something as kind of boring as long-term U.S. Treasuries. So there will be a bounce at some point. It's just a matter of when it decides to kind of kick it into gear. And when it does, again, as I've mentioned in most of the recent sessions I've done for you, it is not my expectation that we are going to have a trend change here. It's just that we might very well get a bounce back up towards that moving average and then roll over again in that particular case. Let's take a look at things from a sector perspective now. And you can see that this is chart 5C for those of you playing along at home. And we've got kind of a mixed bag here when it comes to sectors as well. And you can see many of the green sectors are kind of near the top, meaning that the more cyclical areas are the ones that retain their strength from a trending perspective. So, the financials look really good here. I mentioned the People's Bank buyout earlier, but, and I mentioned Wells Fargo a moment ago when we were looking at some of those individual stock rankings. So those are just a couple of the examples, but there are tons of companies. In fact, the stock we bought yesterday in my top-down trend trading class was a financials company. So there's opportunities there, and that has not been the norm in recent years. Financials, like the oil and gas companies, have been part of the shunned group over recent years, but they have certainly got some nice tailwind going in their favor right now. So a new all-time high in the financials here today, despite the sell-off in many other areas of the market. We also saw that energy hit a new multi-month high. Unlike the financials, this is not an all-time high for energy, but it is a multi-month high, and we continue to see some very impressive growth out of some of those oil and gas names right there. So a pretty solid 1.65% move there. Communications also had a decent move today. They were up 0.78% today. That was actually the area we concentrated on today in my dividend growth investing class. For those of you that want to check that recording, it is now posted on our calendar. Remember, tomorrow morning I'll be teaching my factor-based swing trading class, where we've had a good string of success with swing trading recently as well. So I look forward to seeing many of you there, and David will be teaching his options inventory class tomorrow, and I'm sure with this spike in volatility, he'll have plenty of interesting things to share with you guys during his class tomorrow. On the downside, in the sector perspective here today, it was there wasn't a whole lot of really nasty moves by the end of the day, but where we did have kind of the biggest down move was discretionary. Remember, Tesla is part of that. A lot of discussion on Twitter today as to whether Cathie Wood and company over at ARK Funds was getting trashed today or not, because a lot of those high octane growth stocks were part of that storm that hit in the market session today. So it is possible that Tesla has a lot to do with this really ugly candle right here in the discretionary area. So that was the one that actually sold off the worst. We also had a little bit of a sell-off there in technology. It was down 0.28% at the end of the day. All right, let's get into our trade application example. And for this one, I'm just going to pull up our trend trading chart. This is chart 1A. If it'll pull up for me, hang on just a second. Looks like things are maybe a little bit delayed. There we go. Let me pull up the stock in question, which is PayPal. And remember, I've already done the trade, as I always do. So for those of you that are premium members of Market Scholars, you would get this information before the market closed. I will say today is probably one of those days you didn't want the information before the market closed. Reason I say that is because the stock is trading lower by a couple of bucks after hours right now. Square, it's PayPal's direct competitor, reported their earnings after the bell today, and Square is trading lower. So I think PayPal is kind of trading lower in sympathy of it. So far, not off to a great start with this trade, but we'll see where it takes us nonetheless. What attracted me to the chart was, PayPal has been a tremendous success. We talked about it in one of my question and answer sessions here a few weeks back. It has dwarfed the size of PayPal, which of course used to own dwarfed the size of eBay, which used to own PayPal before that spinoff took place a few years ago. So PayPal is now over $100 billion entity. It's a mega cap company, and it has been truly one of the superstars in the growth world over time. It's been hard to kind of latch onto this company because it has been so strong. So you've kind of had to act quickly when those moments arrive. And I'm wondering if this is one of those moments that is giving us that opportunity. Only time will tell, of course, but what we see here in front of us is a chart that has clearly gone into this series of higher highs and higher lows. The last week and a half has been a very ugly week and a half for PayPal. It topped out at 309, but it came down here and touched $255 per share earlier today, and then closed back higher at $265 to end the day. So it bounced maybe 10 or 15 bucks on an intraday basis there, giving me some impression that the bulls were interested in supporting this stock right here at this rising 30-day moving average. So I thought, what the heck? Let's try to catch a bounce out of this. And so what I chose to do in this case was to buy a call spread here. And you guys can get the details from that, those of you that are premium members, in the Telegram app. But it is an April contract, and it's basically a call vertical that straddles where we're trading right now. So I was buying a call with a strike price lower than 265, and I was selling a call with a strike price higher than 265. The idea behind that is you're hoping for some sort of a move from this level, but you're not being as bold or as ambitious enough to just simply buy calls outright. Now, if you were highly convinced that this stock or any other was going to go to the moon, as the kids would say, then of course buying calls could be a very good way to make some pretty good returns off of that move. It's just that I generally have a more cautious mindset than that, and I want to account for the risk that I'm taking. And so one way that you can kind of offset the costs that go into buying a call is to sell another call against it. Now, the downside of that is you are limiting your upside potential. The upshot of it is you are not going to spend as much money up front as somebody who's just buying the call outright. So you're kind of financing a portion of your call trade, but still making a bullish bet, right? A lot of times when I do these vertical spreads during this presentation, they're credit spreads. This is not a credit spread. A credit spread is where you have higher probabilities of success, the way that we set them up, but lower reward opportunities. In this particular case, it was exactly a 100% return on risk that I'm setting up with this particular trade. So I could make 100% on the money I'm risking with this setup, but it is a directional trade. I do need a bounce from this level, and if that bounce does not manifest itself, then I'm going to lose the money that I put into this trade as well. However, that money is defined. It's the nice thing about using, defined risk strategy like a long call spread. But at least can kind of put a bullish trade into the system to see and kind of test whether a lot of these stocks that are sitting right at their moving averages right now could have a support bounce from these levels, just like we've seen so many times in the past when they've come down to those levels. So anyway, it was a long call spread, April contracts for PayPal. If you need the specific strikes and execution details, refer to the Telegram app if you're a premium member. All right, I hope you got some value out of tonight's video. Thanks for checking it out. A lot of really crazy things going on in the market today, so a lot to discuss here in the video tonight. I hope you got value out of it. If you did, I ask one favor out of you. Go over to Twitter and click like for me. Remember, you can do that on our website directly below the video, as well as looking in other areas like the description area of YouTube. There's a Twitter link there, and also a Twitter link in the emails that we send those of you via email as well. So anyway, thank you so much. I'll look forward to seeing y'all on Thursday, and David should be back with you tomorrow. Take care, everybody. Bye-bye.